Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. One of the most disappointing stocks in the market over the last few years, I think, has been Snap. This is a company that has a great opportunity with hundreds of millions of users to build a very profitable social network. But they may have the worst CEO and operator, and there's nothing that investors can do to get rid of him. So I want to dig into exactly what I mean by that. My name is Travis William. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content and check out my newsletter, Asymmetric Investing, in the show notes. If you enjoy this video, I think you'll enjoy that. And I want to go to the second quarter results, which were released this week and show a lot of strength and then just terrible financial performance. This is the press release from Snap, the high level numbers. 14% increase in daily active users to 397 million. Think about that. This is a platform that now has almost 400 million people using it on a daily basis. And yet second quarter revenue was just over $1 billion. And the company is basically break even, $81 million in free cash flow in the trailing 12 months. Now that's not very much when you consider a non-cash cost like stock-based compensation, but I will get to that in a second. That is a big thing that investors want to think about. Here are the results, and what I want to focus on is this number right here. This is the percentage change from a year ago. So revenue down 4%, operating loss 1% worse. Adjusted EBITDA went from positive $7 million to negative $38.5 million. Even free cash flow continues to be negative. Just not a lot of signs of improvement. And when you dig into the per user numbers, things get even worse. This is the user numbers overall. So this is where you see the 397 million daily active users. That's actually a really strong trend. The fact that there are 100 million people in North America, 200 million people in the rest of the world, and almost 100 million in Europe using Snap on a daily basis is really impressive. And a 14% growth at this kind of scale is a really solid number. But then we start getting to revenue per geography. Down 4% overall. North America is dropping like crazy, down 13%. Europe is only up 7%. Then let's look at the numbers on a per user basis. This is where a company like Snap needs to start monetizing users at a much, much more efficient clip. And it's just simply not doing this. On a global basis, average revenue per user is down 16%, just a crazy drop in revenue per user. North America down 14%, Europe down 12%, and the rest of the world up slightly, but generating less than $1 per quarter in revenue. So why are losses getting worse? Why is the financial performance getting worse? Well, costs are continuing to go up. Costs are up. Adjusted cost of revenue composition going up in almost every single segment are going up. And the most concerning one here is that infrastructure costs are rising at a really rapid rate, $201 million. This might be because of the increase in artificial intelligence usage, something they're using in conversational Snapchat. You can talk to an AI. That's actually relatively costly, and that might be exactly what we're seeing here. So there's actually some decent trends on the content partner programs, on advertising partner costs. This infrastructure cost right here is just kind of out of control at this point. So adjusted gross margin continuing to drop. Not a lot of good signs for Snap, but this is not the worst thing. The worst thing is coming up, and that is this blue line right here. Stock-based compensation at Snap. For each of the last 5 quarters, the company has paid out more than $300 million in stock-based compensation. Think about that. This is a company that is not generating net income. Revenue per user is falling, but yet they're paying $1.3 billion, more than $1.3 billion to employees in stock. That is dilutive to shareholders. So if there is any upside in Snap, it's being given away by management with this stock-based compensation. The problem for investors is that there's nothing that we can do about it. CEO Evan Spiegel and Robert Murphy control 99% of the company's voting power. There are super rights that they have with their class of shares. And so as regular shareholders, there's absolutely nothing we can do to vote specifically Spiegel out. I think he has become the worst CEO in tech. Not only is he not creating value from a major platform that should be generating a significant amount of revenue and profit at this point, but he's giving away the company in the form of stock-based compensation that is just at an astronomical level. This is a company that I did see upside in, particularly during the pandemic over the last few years. They had some positive trends in revenue per user, I saw that as a bright spot, but that has absolutely reversed, and it shouldn't be the case for a company like Snap that has been putting a ton of money into building out an advertising network and trying to improve monetization. Just has not been successful. So I do own shares of Snap. This is one that I'm going to be looking to sell in the near future because I think Evan Spiegel has proven to be one of the worst CEOs on the market today. We saw that again with the most recent earnings report, and the stock-based compensation, which I was hoping was going to be coming down over the last few quarters, just simply hasn't. And so they continue to give away the company and any future value that it might have, which is just crazy to me. But what did you think of the results, and what do you think of Snap stock? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.